We just want to quickly get a chat in with the management of RPG Life Sciences. Now, they've reported a good set of numbers. In Q2, the revenue growth was about 12%. Margins expanded to 25%, aided by cost efficiencies. At the bottom line, we've seen a decline, but that's on account of an exceptional. Yugal Sikri, Managing Director at RPG Life Sciences, is with us on the show. Thank you very much, sir, for joining in. One of the key highlights of your performance over the last many years has been the consistent margin improvement. Margins were 16% in FY20, and now they've inched up to 25%. Is there scope to expand margins from here, 25%, or are we at peak margins? And if it can go up, what will drive it?
Thank you, Reema, for getting me on the show. As you rightly pointed out, the story of RPG Life Sciences has been a structural story. We have been able to consistently improve the margins year after year for the last 5 years. We have a fourfold increase in EBITDA and 1,290 basis points increase. This quarter, we have registered the highest ever EBITDA margin of 27.8%. And this trajectory is continuing. It is expected to continue, though with a little bit of obtuse curve, because the structural story of the margin improvement, which covers both the OPEX and the COGS, is still on. So
30% margins, sir, possible? You're at 27%, you said. Can we get to 30%, say, in the next 3 years?
This quarter is 27.8%. For the H1, it is 26.5%. And the story is on. I generally don't give the guidance, but I mentioned to you that the trajectory should be on, though a little bit obtuse.
Okay, all right. Hi, Mr. Sikri. Good morning and good to see you in. Well, for the half-year mark, I think you've delivered more than double-digit revenue growth. Could you break it up for us in terms of a performance? What is the outlook from here on, and how do you see all your three verticals, domestic, international formulation and APIs, grow from here on?
Okay. The three segments which we have are domestic formulation, international formulations, and API. Domestic formulation contribute about 66%. The international formulation contributes about 19%, and the API contributes about 15%. And all the three segments have registered double-digit growth. Our domestic formulation business has been growing consistently above the market. This time also, the growth is almost 2x of the market growth. Similarly, international formulation growth has picked up. Our growth is to the tune of 17%. For the H1 I'm talking about, for the quarter, it's close to about 13%. And API also, which is not doing so well, the growth used to be a little less than a double digit. It has also picked up and has got a double digit growth, about 15% or so.
Okay. So can we talk about M&A? Because post the Navi Mumbai land monetization, you will have cash of close to about 140-150 crore. And last quarter, you said you're actively evaluating 18 proposals for potential acquisitions in both formulations and API segment. Where are we on the M&A front? Are we likely to close one by the end of this fiscal year?
I think, as you rightly recalled, we have our cash surplus in place. This addition of around 80 crore plus land monetization has upped the cash surplus over 200 crore now, and it is after paying up the debt for the last 5 years. And in terms of the M&A, the active search is on. We are looking out for a very accretive proposal, and let me share with you, there are good number of proposals both for the formulations and API are under consideration at the moment. Some of the projects are a little ahead, some of the projects are a little behind. I will be able to share with you as we have a concrete news available to you, but I can tell you that the monetization of the land at Thane has upped our ambition further, and we expect this to happen ASAP. That's what the team is currently working on.
ASAP is when the acquisition is likely to be, you should be able to close an acquisition, right? So have you narrowed down? 18 proposals were there last quarter. Now, how many are you actively evaluating? Have you zeroed in on at least a few closing in?
Yeah, I understand your question. You would understand that M&As are such that we just can't be on the media to talk about it.
Sure.
I mentioned to you that the work is on. We are both. Good thing to note is that we were earlier restricting only to formulations. Now we have also expanded our range for the API, and till we are finally able to conclude any of the initiatives, it will be difficult for me to talk a little more about it.
Okay. Thank you very much, sir, for joining in.